Hi friends, welcome back to Stockwood channel, a channel where we discuss investing strategies with facts. So friends, this is the second part of the Tata Motors series that I'm coming up with. So in the first part, I had discussed on the Tata Motor business and the product mix, the financial, especially how the consolidated revenues and operating profits are differing from the standalone revenues and profits. And then I spoke about how the sales of various products of Tata Motors is doing, especially the commercial vehicles, the passenger vehicles, and the JLR business. So this was the brief about what I have spoken in part one. I would highly recommend you to go and watch the part one so that you can completely understand the perspectives of Tata Motors. Right. So in this video, I'll be concentrating on basically what are the factors that will affect the future of Tata Motors. So as I had spoken in the last video as well, there are three parts or 3 points that will decide the future of Tata Motors. That is the debt that the company is having currently, the supply chain issues, and the JLR business. And also there are certain risks associated with Tata Motors. I'll be briefly talking about that in this video. So friends, before we go further into this video, humble request from my side to subscribe and like this video. It means a lot to me. So with this, friends, let us talk about the first point, that is the debt that the company is owning. So if you see the consolidated profit and loss statement of Tata Motors, the sales has grown almost from 92,000 crores to 2,88,000, almost three times in the last 10 years. Whereas the net losses for this consolidated business of Tata Motors is almost around 18,000 crores, which is almost 6% of the total revenue. And also the borrowings, the currently the company consolidated borrowings of the company is almost around 1,48,000 crores. Well, if you see standalone business of Tata Motors, basically the sales has grown from 35,000 crores to 49,000 crores. That is just 1.4 times in last 10 years. Also, the net losses is minimal compared to the consolidated one, which is almost around 160 crores. That is making up of almost 0.32% of the total revenues, right? And also the borrowings is slight or comparatively less, that is 26,000 crores, while if you see the borrowings of the consolidated business of Tata Motors is 1,48,000. The reason why I'm talking about this especially is this again brings up to the point of what is the consolidated and the standalone business. Well, the standalone business will have only the Tata Motors commercial vehicle business, passenger vehicle, and the JLR business. The consolidated business will have other joint ventures, joint operations, and associates of Tata Motors. The reason why I had taken this point again is the Tata Motors have declared in August 2020 that they are eyeing for a zero debt company in 3 years, and also this has been again reiterated by the company in July 2021. So I think that most probably they would give away some of their joint operations or joint ventures in terms so that they can reduce their net losses and borrowings, so that it also brings in additional cash flow to the company and improve the overall financials of the company. So this is an assumptions, friends, that I'm making, that given that Tata Motors is clearly saying that they want to make it a zero debt, given the size of the borrowings that they currently have, it is impossible for the company to turn around completely without selling or giving away some of its joint ventures or operations. So the key takeaway from this point from this slide is, friends, the reason why the company shares has rallied massively from around 70 rupees in 2019 to currently around 400 rupees is that the company declared that it is going to achieve zero debt in 3 years, and the most of the investors have great trust in the company, especially Tata Group. So that is why they have great confidence in this company, and so that the with the future perspective that the company will become zero debt, the shares of this company has rallied. Going further to the second point, the supply chain issues, friends, if you see in the recent quarterly results, also they have clearly mentioned that the chip shortage that they were facing in the previous few quarters have improved, and that is actually showing up in their production volumes. So if you compare Q3 of FY22 to Q2 of FY22, the volume production has almost increased by 41%. So that is a positive sign that the supply chain issues are getting reduced. And also one of the other important factor is Tata has already declared that they are going to venture into semiconductor assembly units. So this will be Tata Group, friends. It will not be Tata Motors as such, but whatever the Tata Group does, it will have a direct or indirect effect on Tata Motors. And also there is a recent report that one of companies, Tejas, which Tata owns, has acquired a majority stake in semiconductor firm like called Sankhya Labs. That is almost a 63% stake in this company, that is giving a overriding authority of this company. So the key takeaway from this slide is the company is moving in the right direction in terms of resolving the supply chain issues. So, with that, let's move to the third and the final part of what will make and break the Tata Motors. Right. So, this is one of the most important part of the Tata Motors growth story. So, this is the JLR business. I have covered this in the first part why JLR business is the most important part for Tata Motors. So, just share your thoughts in the comment box why JLR is the most important part for Tata Motors. All right. So here you can clearly see that for the JLR business, the company has come up with a strategy called Refocus, that is mainly to improve the operational performance of the company, mainly the JLR business. So they have identified six pillars. The first one being the quality, so that they improve the quality of the product, so they reduces the warranty spend that they are currently doing. And the second is to improve the overall delivery and performance efficiency, so that they can save cost. And the third will be to reduce the cost per car, and that is also in the cost saving mode. And the fourth one will be on the supply chain issues. Right, they want to resolve all the supply chain issues and make a faster delivery and commit to the end consumers, so that they have more sales of their cars, right? And the fifth and the sixth one is to increase the market share in the respective geographies, so that it will increase more revenues and the cash flows will improve. Right. So this is the strategy that they have come up for the JLR business. And while I was going through one of the media report, I came across one of a very important or a very interesting note that they have shared. With these cost cutting, they have already saved almost $1 billion in their spend in JLR business. And with that, they actually to turn around the business to profitable, the JLR business in the last year they had to sell 6 lakh units of cars, but with the saving of almost $1 billion, the break even or the to make the company profitable, that number has come down to 4 lakh units. Right. So this is showing a result, actually the strategy that they have come up in the company. And also the next question that will come up is what is the current sales of JLR business? If you see here, this is again from their previous year's annual report, where in FY21 they had sold just 3 lakh 47,000 units. So to make it profitable, they have to come to around 4 lakh. But if you see the previous years, friends, it was almost around near to 5 lakhs, right? So once they cross the 4 lakh mark, it will actually turn the JLR business profitable. So the key takeaway from this point is actually they are in the right direction in reducing the cost and to make the company profitable. So another important point is the risk that the company faces. The company has a very good risk management committee that will take care of all the risk in the operations, manufacturing, and marketing part, and they will mitigate the risk. Right? There are few risks that the company has called out. You can see here the supply chain disruptions that is actually on the semiconductor part that they have already started addressing, and then the increased competition, right, from other players and automobile players in Europe and India. I have covered this in part 1, where I have shown what is the market share of each car manufacturers in UK. There you can see that BMW or Audi, which is the market leader, has only a market share about 5%. So that gives what level of competition is there in UK and European market, right? And in addition to that, inflation across the globe is another risk that the company is seeing, especially that will bring down the power of consumption by the consumer. Right, and also the JLR brand has very limited product range that is mainly catering to luxury and all-terrain cars, so that is actually limiting their competition in the particular market. Some of the important points that I have to cover here, friends, is recently in February 2022, JP Morgan has upgraded Tata Motors rating as overweighted rating. Mainly, they have called out these 3 points, which will actually summarize my two parts of Tata Motors video. The points that they have called upon is the company, that is Tata Motors, is improving the profitability of Land Rover business by proper cost saving strategies. And also in the Indian market, the company is launching new models, which is actually helping to the market share. And the third part is they are strengthening their commercial vehicle business in India, that is also actually contributing to the growth of the company. The third and the final point I want to cover here is recently you might have come across this, right? TPG, which is one of the foreign institutional investors, have committed themselves to invest $1 billion in Tata Motors EV business. This shows the level of confidence that the foreign institutional investors and the financial institutes are showing in Tata Motors. So, friends, I think this will give a lot of facts for or you to decide upon whether you want to keep invested in Tata Motors, or you want to add on dips, or you want to sell off all the shares. So, I have given a lot of fact-based information for you to take the decision. I myself is an investor in Tata Motors, and my strategy will be to hold this company for another 2 to 3 years. All right, so that is my personal opinion. With these facts, I think you can make your own decision based on your risk appetite. All right, so thank you, friends. Please subscribe to my channel and like this video. I'll see you in the next video. Thank you.